Hey, welcome to the show, everybody. No intro music this time. The producer failed.
No intro music.
But we are here.
Dang it.
Well,
I like
I'm
intro
here.
music.
Jerry's there.
Right.
We're having to do this remotely. How's the weather up there
No
in
problem.
Boston?
I tell you what, right now it's really nice. It is typical Boston weather. It was really nice early this morning, and then it got very stormy, and now the wind is kind of dying down. The sun's coming out a little bit. It's supposed to be like low 70s today, but tomorrow a high of like 52.
Wow, it's crazy.
So, yeah, it's crazy. Yeah.
I was just up there with him last weekend, and it was beautiful weather. It's crazy, man. You know, you're getting old when you're doing a podcast and you're talking about the freaking weather. Let's talk about TSP. How about that? Let's talk about TSP.
Right, let's shift to TSP. I mean, I don't know if anybody wants to talk about the market, to be honest with you. It's
crazy.
It has been. This was the worst week for the market since basically the depths of COVID, and there's no end in sight. Like, that's the problem. I mean, everybody wants to know when can we? At least now the question is, when can we start to anticipate a bottom? So people aren't, saying, hey, the bottom's in. They're trying to look for when to anticipate it. We had talked about a potential recovery rally a couple of weeks ago. That fizzled really quick. And the key here in terms of technical analysis is to be able to see when it fizzles. Because if you're using these recovery rallies as a way to reduce your stock exposure, you don't have a lot of time. We've only had a couple of up days, and then the market immediately rolls back over and comes down. So, we're still waiting on a tradable recovery rally. We're going to get one, but we haven't had it yet in this bear market.
All right, man. Are we ready to get into it?
Yep, let's do it.
Let's do it.
So, TSP Weekly Update Show, 19 June 2020. Oh, and before we forget, happy Father's Day to all the fathers out there. It is Father's Day after all. Okay, so show this week, we're going to take a look at the TSP Tech Refresh, a little update on that. It took me several days and hours on hold, which I know it did for a lot of people, but I finally got validated into the site. I think it was Wednesday. We're going to go through some of those things. And then I just want to give a plug and kind of tell you guys about this YouTube channel called Wealthion. It's an unbelievable tool. Adam Taggart started it, I want to say a year ago. It's relatively new, but he has some of the best guests on there. I watch it religiously. I've been pushing out the weekly update that one of the guys that works in his company does a weekly update over the weekend, and it's usually really, really good. So we'll just talk about that for a minute. And the bonus chart is EEM, which is emerging markets. Okay, so it's similar to the iFund, but not exactly. We're gonna go through what countries are in there, versus UUP, which is the US dollar index. Okay, and the chart is really interesting. How you can basically almost reverse correlation between emerging markets and the US dollar. And then we'll look at the TSP, basically 2.5-year weekly charts. Okay, so before we get into all that, I put up this chart a couple of days ago, I think both on Facebook and on Instagram. And it generated a ton of comments. And the point of it when I posted it wasn't so much this part, right? I added this part to the chart saying that this is where we could be. All right. And the reason I did that is because if you look at it, so first of all, this is a chart of 1929, right? So it's 1929 to 1933. It's that stock market collapse. So let's just pretend this is the top in January 2022. We had this first move down into March, right? Then we had this March recovery rally, and then we came down, and we're waiting for a sustainable rally, which in this example, it's this one, right? So that's why I put in this arrow, right? We could be here because we're in free fall right now. At some point, we're going to get to this, but we're not there yet, right? It could be that we get to a bottom, we get to this, and it keeps on going, right? That's always a possibility. And we'll know it if and when we get a break in the trend line down there, and then we're continuing lower, right? That's how the technical analysis works. You want to be on the right side of the trend. So again, this is what I added to this chart. The real takeaway is the sentiment that goes along with a bear market, okay? So the first big move down in 1929, everybody says, oh, this is the bottom, right? It was 3,800. It went down to 1,900, so about 50%, right? Everybody says, oh, that's got to be the bottom. We lost almost 50% of our money. Then they have recovery rally. And the recovery rally gets back 50% off the lows. So everybody's like, yep, we're rocking, right? We're back. It's gonna keep on going to new highs. And of course, it hits that 50% retracement level and rolls back over, right? No problem. Just a little bit of profit taking. It's going to turn back around and keep going, right? Then it broke the prior low down here, right? Got a little bit lower. People say for sure this has to be the bottom, right? Then we get another recovery rally. And this is, 25, 30% off the low. So it's a big move. It doesn't look like it in this chart, but these are the big moves that we are trying to get in the current bear market. Here's December 1930, and here's March 1931. So this little, what looks like a little recovery rally in this chart is a year long, right? This thing took a long time to happen. Who knows if it's going to happen this time? But if your brain is working, if you're thinking what these comments are saying, you're holding on to a bias and you're not paying attention to the analysis of the price movement. And it's really, everybody says that it's kind of common knowledge that people generally buy at the top and sell at the, no. How does that go? People tend to buy high, buy at the top and sell at the bottom. And the reason that is because of these comments in this chart. It's, everyone says this time it's going to be different. And they get, eventually when you get to the bottom, everybody's like, forget it. I am out. Sell it all. And I am never investing again. This is when, the VIX is like 100 and nobody wants to talk about the stock market. Nobody wants to talk about TSP. And they just pretend it's not there because they're just completely frustrated. That's the bottom. And we are nowhere near that level of sentiment right now. So hopefully the chart kind of resonates with you. It wasn't designed. I didn't put it up to scare people or to say that this is what's going to happen. I put it up as a way to see sentiment as it declines. And then you can reflect on your own kind of sentiment of what the market's doing right now and see if you kind of align with, the majority. For me, it's technical analysis takes away the emotion. So if you can go back to that chart one sec, when, eventually we're going to get a bottom and we're going to get a recovery rally. And if you're going to draw connect the bottoms on the recovery rally we have, and if it breaks down, that's the time you need to get out again, because there's no way of knowing how low this thing's going to go. All right. I could talk about that all day, but I think hopefully you guys get the idea. Okay. So the TSP Tech Refresh update. Like I said, it was quite an adventure getting validated finally into the system. I did get one pretty good tip from the help desk. They told me that apparently there's a problem with the Authenticator app, because you have to have two-factor authentication, and they give you a couple of different choices. And I wanted to do the Authenticator app, but he recommended against it, recommended that I just use text as the option. So I did that. The downside, of course, is if you're on an airplane or, you don't have a phone signal for whatever reason, you're not going to be able to get it. But apparently it works much better than the Authenticator app. Okay, so if you guys didn't do it, I'm going to run through the next couple of slides. You definitely want to hit that important information here button because there's a lot of important information there. Okay. So first slide just says, right, welcome to your new account. You can do all these things. These are all the things we gave you in this new update. So one of the things that they've definitely been putting out is that your beneficiary information may not be accurate or may not be there at all. In my case, it was not there at all. So they're recommending that everybody go back in and make sure that your beneficiaries are correct. Okay. Installment payment dates. I've seen some anecdotal problems with this on Facebook as well. The system is trying to catch up. So I know everybody didn't get the correct installments on the dates that they expected, but going forward, it's supposed to be all payments will be dispersed on the 15th of the month. The payment schedules will be sent. If the 15th is a holiday, it gets dispersed the following business day. Distribution date applies to monthly, quarterly, and annual payments, and you will not be able to change this date. So they're not giving you the option to, when you're going to get the installments. It's going to be the 15th. Access to historical information is also something that people were talking about on Facebook. I think they've resolved it in the last couple of days, at least back to some date. Originally, it was only back to June 1st. So when you pulled up when you first logged into the account, it told you I think it said your PIP or your rate of return, I can't remember, but it only went back to June 1st. And I think they have since fixed that. Changes to your maximum loan amount calculation. They definitely did some kind of maneuvering with how they look at how much they're going to give you for a loan. But at least for me, at the end of the day, the way I looked at it is you can take a maximum of $50,000 out of TSP for a loan. Now they've just put in more restrictions. So 50,000 is still the maximum because that's the IRS rule. But there's all these other rules that will decrease that amount that you could borrow against. And they still have the general purpose and the primary loan. Like if you wanted to get a down payment for a house, for example, is different than a general purpose loan. Account hold versus account lock. I don't know if they had this in the legacy system. I never used the feature if they did. But they've transferred that hold to the new system. If you had initiated it before, it'll still prevent processing of loans withdrawals. So if you want to lock down your account, you can certainly do it versus putting it on hold. I mean, I log into it quite frequently, so I've never used the lock or feature. And this is the kind of thing I was talking about before, the year-to-date and conversion-to-date personal rate of return information. So you go into my account and you see year-to-date and conversion-to-date. The information for the rate of return for your personal TSP investments represents data as of June 1st, which is when they transitioned. And when I was first setting up the account, I had the guy online and I was going through some of these tabs and I asked him, my rate of return, it's not correct. And he didn't actually know the answer to it. But as I went into it further, it's obviously up on the in this important information tab. So don't get too freaked out if your PIP is positive, for example, which if you're in the G fund, your PIP is positive from June to now. So a lot of people had questions about that. Address change in document history, basically all that kind of information. You need to go in there and make sure it's accurate. I would not assume that anything is getting accurately pulled over from the legacy system. Okay. So, give me 1 second. Okay, so we're going to look at the change investments tab in a second. On the next slide, I want to get into that a little bit, but the account summary, this tab, lots of good information. You definitely want to take a look at that. Account activity will be useful once all that past data is fully updated. If you go in there right now, there's basically nothing in there because it's not giving you all your previous transactions. Account statements, you basically go in and you request by date which statement you want, and a PDF opens up and you can print it or share it or whatever. So it's pretty typical now to like a bank. If you go in and you ask for old statements and it brings up a PDF for you. And then beneficiaries, like I said, have been a problem for a lot of people. A lot of the data didn't port over. So definitely make sure you look at this tab and add beneficiaries as necessary. And then if you hit this drop down right here, you get payment history and withdrawals. So there's 2 more tabs that are in there. Okay. So now we're going to take a look at this tab, the change investments. So change investment mix, this one, okay? That is what we used to call change of fund allocation, okay? So if you're changing your investment mix, you're telling TSP where you want your new contributions to go, all right? So this used to be change of fund allocation. The moving money between funds, that's an IFT. Okay, that's the same as it was before. They just changed the name, and you can go in and reallocate between the funds. And if you hit the example there, it kind of walks you through it a little bit. But that's the difference kind of in the nomenclature. And then you go here to set up the mutual fund window. I have not done that yet. Like I said, I just got validated into the system on Wednesday, and I've been going through a bunch of other things, and I haven't set aside the time to launch into the mutual fund window yet. I will do that this week, and we'll kind of give you guys an update about that next week. Okay, that is about it for the new TSP app update. All right, Wealthion. So here's what the YouTube channel looks like. Adam Taggart, he used to be, I'm not even sure exactly. I don't think he was a hedge fund manager. He definitely ran money, got out of that business for whatever, and opened up this YouTube channel about a year or so ago. He brings on unbelievable guests. I can't remember his name right now, but that is the guy that does the weekly updates, and it's really good. I would definitely take a look at it. You can kind of see that almost all of them are about an hour long. They're not really long. They're all roughly an hour, so it doesn't take too much time to go through and check them out. Cannot stress enough the value of the guests that he's bringing onto the show. So if I were you, I would definitely check it out. Okay. So the bonus chart, EEM versus UUP. So I know this chart looks a little bit crazy, and hopefully I can give you guys a little bit of insight into why I'm looking at it. So EEM is on the top, right? So it's the red and black. When the tick is black, it's an up week. This goes back to 2013, and it's a weekly chart. So each tick is a week. So the red tick means it was a down week. The black tick means it was an up week. So you can see, if you just as a cursory glance, when the EEM is going up, the UUP, which is the dollar index, is going down, right? When the dollar goes up, EEM goes down. It's almost an exact negative correlation, and it makes sense, right? Because when the dollar loses value, then the currency of other countries is increasing in value. So the emerging market funds go up when the dollar goes down. So you don't really have to look at, or you can use the dollar, the inverse of the dollar, as a proxy for emerging markets. And you can also use it for the I fund. It's just that emerging markets, actually, I was going to pull that up. So the top 5 countries in the emerging markets index, EEM, are China, India, South Korea, Brazil, and Saudi Arabia. Okay. So I don't think any of them are in the I fund. South Korea might be. China is definitely not. That's a big political hot button. But as you can see, as the dollar increases in value, foreign countries' stock indexes become more valuable in dollar terms. So there's almost a direct inverse correlation. So how is the best way to kind of look at this? EEM is pretty good because it tends to trend, right? Connect the bottoms, and when it breaks down, it breaks. It tends to trend for a long time in one direction, so it's pretty valuable. So the dollar definitely is worth looking at. Again, the dollar is UUP, is a ticker symbol, and EEM is a ticker symbol for emerging markets. What I did with these vertical dotted lines, all I did was put the line at the top of all of these major tops in the EEM. And I just wanted to see if I could see if the dollar led or lagged the emerging market index. Because if I know that, for example, emerging markets right here rolled over and the dollar continued higher, then I can know that emerging market starts rolling over. I know the dollar is about to roll over, right? If you can find leading indicators that either correlate directly or inversely correlate, you can use that to trade the other one and have an advantage to everybody else. So that's what I'm trying to do here. So hopefully that gives you guys an idea of some things beyond outside of TSP, but some tools that you can use to also manage TSP. Okay, fun charts. We've been doing these for quite a while now. Here's the bottom from COVID. This is about a 2.5-year weekly chart. Each tick is a week. The blue line is the 20-week exponential moving average line. Once we got back above that 20-week line after COVID, we got support at the line all the way along until it broke down in January. And once it broke down, yep, we did get above it back here on that March rally, but ever since then, the market's continued lower. So until price of the C fund gets back above that 20-week moving average line, there's no hope for a sustained long-term rally. The other thing you want to really look at on this chart is RSI. So once we got back above RSI at the 50 line right here, which also corresponds to getting back above the 20-week moving average line. Once we got back above there, we got support at that 50 line on RSI all the way along until we lost it back here, which also corresponds to this price move down. So until price gets back above that 20-week line and RSI gets back above that 50 line, there's no point in being in the C fund. When I say no point, it just means it continues down. And if you are in the C fund, your account will continue to decrease in value. And if you're contributing to the C fund, every payday you're doing the dollar cost averaging thing, I Are you buying shares cheaper? Yes, you're definitely buying shares cheaper. At the end of the day, you're buying a depreciating asset. I don't know why anybody would want to buy a depreciating asset. If I put $1,000 per payday into my TSP, I'm contributing it into my TSP. If I put it in the G fund, let's say I do it for 10 pay periods, right? $1,000 for 10 pay periods, that's $10,000. If I did that in the G fund this year, maybe I have $10,600 or something right now in my account, right? If I contributed that $1,000 a week, $1,000 a payday into the C fund, it's probably worth maybe $8,500 right now. So eventually, when the market bottoms, if I had been contributing to the G fund this whole time, I can take that $10,500 or whatever and buy the C fund and get the gains, versus having $8,500 in there and getting the gains from that level. So
yeah, we've done that. We've walked through that a few times. What's the video that you did just on that? Was it locking in the losses? There was the video.
Yep, locking in. Yeah.
Yeah, you guys can check that out on our Facebook page. It's one of the more recent videos there. I really highlight. Yeah, is it pinned up there on the page? Yeah, great. So
on the public Facebook group.
Yeah, if you guys go and check it out, it's a 12-minute video. If you don't understand what we're talking about here, just go watch that video. It is very enlightening to people that are just kind of stuck in these other mentality. We cross the lines a lot in this when we're thinking about like brokerage accounts and buying and selling regular, stocks, as opposed to operating within a retirement account like a 401k, an IRA, our TSP. They don't all work exactly the same, and you need to really understand that to kind of grasp when you hear all the pundits and all the financial people talking about this stuff, and us included, right? So we're here for education, and so we've got lots of videos and articles that kind of explain this stuff. So it is very important to understand what Jerry was just talking about.
Yeah, the video is definitely worth checking out, and the ebook. I mean, the ebook goes into it a lot more. The video is 12 minutes. The ebook goes into it in a lot more detail. S fund, same thing, but looks worse, right? But it's the exact same thing. Once we got back above the 20-week moving average line, we were back above 50 RSI. We stayed there until the collapse back in November of 2021. And in the case of the S fund, we had this little wick, but we have never had a weekly close back above that 20-week line since back here in November 2021. You look at this chart and you go, well, a bottom has to be coming. It's just like the first chart we put up, right? I mean, if you don't see that this gap down on a weekly basis implies that the market keeps going down, I don't know what to tell you. There's absolutely, I mean, we tried to put in some kind of support there at 1600, and then this week it just gapped down and finished almost at the low for the week.
It just didn't hold.
There's just nothing good there at all. iFund rolled over a little bit slower than the other funds because, more than the S fund, because the iFund isn't as tech centric as the S fund is, right? The S fund is mostly growth tech companies, and obviously growth really took the hit when interest rates started going up. But now all the other non kind of growth companies are starting to roll over as well. And that's just what happens in a bear market. Again, a gap down on a weekly chart, not even daily, it's a weekly chart. A gap down like that, that's why they, CNBC is saying it's the worst week since 2020. It's not. You might look at it and say, well, what do you mean? Last week was worse, right? Last week we had a bigger price move. But the significance of this is much more dire, let's say, than this one down week that was still within this range. Now we're outside of that range in free fall. So, yeah. F fund, even it had a huge move. This is as low as it got for the week, and it had this huge move back up, but still ended almost 1%, ended down 0.91 for the week. And that was because of the Fed announcement this week. I mean, that the old sort of, you know, I don't even, the old kind of statement of don't fight the Fed, right? When the Fed says they're going to get in and boost the economy, whether it's because of COVID or for whatever reason, they call it the Fed put. When the Fed says they're going to step in and start buying, that's the bottom. When the Fed tells you it's raising rates and it's going to try to bring demand down, they're not kidding. They're going to do it, and the stock market is going to respond to it, which it has been. Until the Fed pauses raising rates, the market's going to continue to go down. It doesn't go down in a straight line, obviously, but until the Fed changes its language, the market's going to keep going down. All right.
Questions.
That is all I got.
Why is this always so? Shows are much shorter when we're doing it virtually. I think it's because I shut up a lot and just let you talk.
Yeah, I don't know. I don't mind doing them this way, but I kind of like it better in the office. But this is definitely good that we can do it. You know.
Yeah, because usually we go have a beverage after, and so it's exciting. But we'll have to do it separately today. All right, man. If you guys like the show, please share it with your friends. And if you do have questions, put them wherever you find the video, Facebook, YouTube, in our Facebook group, wherever you find it. If you find it somewhere where you can't make a comment, put a question, you can always send us one at support@growmytsp.com. And Jerry was talking about the ebook. The next slide that comes up as we go out, we'll give you the address for the ebook, which is growmytsp.com/ebook. If you want to see our methodology and understand where we're coming from. All right, man. You got any last words of wisdom, Jerry?
Sounds good. No, I hope people watch the video and read the ebook, because the lower the market gets, the more stress there is on the buy and hold methodology as an investment methodology.
There's a lot of people that are high anxiety right now, right? Like just off
right.
the
But
charts.
see, that's why the amazing thing is that's why the Fibonacci levels and the other things work, right? 50% is actually not a Fibonacci number, but it is absolutely a level at which people say, I've lost half of my money. I can't take it anymore. I'm getting out.
Yeah,
and a lot of times that represents the bottom.
Yeah.
I would just say in general, the biggest thing is to be able to see the trend. Since say the bottom in COVID, everybody can look at a chart and say the trend was up, right? Once it broke down through that 20-day or 20-week moving average line in January, that was a shot across the bow. Is a huge, understatement.
Yeah.
If you didn't reallocate, then you didn't have the education, right? You hadn't been watching the market, or you had such a positive bias that, oh no, the market will come back up, which is what we showed in the first slide, right? One of those two things: either you didn't have the education, or you couldn't get out of your own way. And so, as the market continues lower, it puts that much more strain on you, right? And it goes into this whole idea of, I can't get out now because I'm locked in, because I'm locking in my losses. You could lock in your losses at wherever we are right now, 25%. And if that's your mentality, you might be locking in your losses at 75%.
Right.
So
again, all right, guys.
We can talk about that all day.
I know. And we will continue to talk about it. All right, guys. Hope you have a great week. Hope you enjoyed the show. Again, share it with your friends if you like it. If you don't like it, share it with your friends anyway. All right. See you guys next week.
All right.
Talk to you later. We're out of here.